Hey everybody, today we're going to unpack something that's been quietly shaking up the crypto mining world, and surprisingly, it's not Bitcoin or Ethereum this time. It's Kaspa, and more specifically, the fact that Mara Holdings, the world's biggest publicly traded Bitcoin mining company, has gone all in on it. That single move says more about where the future of proof of work may be heading than any tweet or price chart ever could. So grab your coffee, because this story deserves your full attention. This video is for educational purposes only. It is not financial advice. Always do your own research before investing in crypto. Let's start with Mara Holdings, a company that needs no introduction if you've spent any time around the crypto space. They're the largest, most established, and most respected Bitcoin mining firm on the planet. From the very beginning, they've had one simple philosophy: focus on Bitcoin, ignore the noise, and play the long game. While countless miners over the years have been tempted to experiment with alternative tokens, Mara never deviated from their core mission. When Ethereum mining was booming, and I mean really booming, and people were making insane profits mining it, Mara didn't chase that train. They didn't even dip their toes in. They stayed disciplined, stuck to Bitcoin, and never once wavered. That's the kind of focus that built their reputation as one of the most serious and strategic operations in crypto. But here's the twist that caught everyone's attention. When Kaspa entered the picture, a relatively new proof-of-work project, Mara didn't hesitate. They didn't take months to evaluate. They didn't treat it like a small experiment. They went in head first. That alone speaks volumes. Think about it. This is a company that said no to Ethereum, even during its golden era of mining, yet they said yes to Kaspa almost immediately. That's not random. That's calculated. So what exactly is it that Mara sees in Kaspa that the rest of the retail market might be missing? The answer lies in Kaspa's technology and how it reinvents what proof of work can actually do. Kaspa isn't just another copy of Bitcoin. It's more like Bitcoin's next evolutionary step, a version that's faster, smarter, and more scalable without losing what made Bitcoin revolutionary in the first place. Its secret weapon is something called blockDAG technology, short for directed acyclic graph. Now, without getting too technical, this basically allows Kaspa to process multiple blocks at once instead of waiting for each block to finish before starting the next one like Bitcoin does. In simple terms, think of it as running multiple checkout counters at the same time instead of forcing everyone to wait in one line. The result? Lightning-fast transaction speeds. We're talking roughly 1 block per second. All while maintaining the same high level of decentralization and security that proof of work is known for. This is where things get interesting. Remember Satoshi Nakamoto's vision for Bitcoin? It was supposed to be a fast peer-to-peer cash system. But as we all know, Bitcoin struggled with scalability. Transactions became slower, fees increased, and it couldn't handle mass adoption as digital cash. Kaspa actually solves that problem while staying true to proof-of-work principles. It doesn't rely on layer 2 shortcuts or proof-of-stake compromises. It scales natively directly on-chain, something no other proof-of-work coin has done this effectively. And despite recent price volatility, the fundamentals of Kaspa's network remain incredibly strong. Its hash rate hasn't crashed, developers are consistently pushing updates, and the community is growing steadily. Those are signs of a healthy, long-term project, not a pump-and-dump token. In crypto, resilience matters, and Kaspa has shown that it's built to last. Even better, Kaspa's ecosystem is expanding. A new development called Kasplex, Kaspa's own Layer 2 analytics platform, just got listed on DeFi Llama, which is one of the most trusted sources in decentralized finance data tracking. This isn't just a casual mention. Being recognized on DeFi Llama places Kaspa among serious DeFi projects. It means the world is starting to take its ecosystem seriously, and that's a big deal. Kaspa isn't sitting still. It's actively building, growing, and integrating into broader blockchain networks. The addition of Layer 2 capabilities shows that Kaspa isn't just focused on mining or transactions. It's laying the foundation for an entire decentralized infrastructure. Now let's shift gears and talk about the market side of things. The charts. While charts don't predict the future, they give us valuable insights into sentiment and probabilities. And right now, Kaspa's technical setup looks genuinely intriguing. With Bitcoin and Ethereum both showing strength recently, Bitcoin up over 3% and Ethereum climbing more than 4%, the positive momentum has been spilling over into altcoins. Kaspa has followed suit, jumping over 7% in the same period. But what's really catching traders' eyes is the pattern forming on its 1-hour chart, a potential bump-and-run reversal pattern. This isn't some new age chart voodoo. It's a classic, time-tested technical formation used by traders across stocks, forex, and crypto for decades. It often signals the end of a bearish phase and the start of a bullish reversal. Here's how it unfolded for Kaspa. The pattern began when CAS got rejected from its descending trend line around the 6.5 cents area. That rejection triggered a sell-off, leading to a sharp dip and forming the bump near the 4.8 cents zone, basically the point where weak hands got shaken out. Then came the rebound. Kaspa's price surged, broke through the descending trend line, and then retraced slightly to retest that same line, but this time as support. That's an important detail because when previous resistance becomes new support, it often signals a healthy shift in market sentiment. As of now, Kaspa's trading around 5.4 cents, just beneath its 200-hour moving average of roughly 5.6 cents. This line has become the key decision point. If CAS can close decisively above it, it could trigger what's called the run phase of the bump-and-run pattern, essentially confirming a bullish breakout. If that happens, the next target sits around 6.3 cents, which would be roughly a 17% upside from where it is right now. And let's be honest, in crypto, 17% gains can happen faster than you'd expect when momentum picks up. Of course, if Kaspa fails to push above that moving average, we might see short-term sideways movement or a minor pullback. That's perfectly normal and not a bearish sign as long as the price continues to hold above its 5-cent support area. The overall structure still looks healthy and supportive of a potential breakout in the near term. Many analysts have pointed out that Kaspa's current chart structure resembles Bitcoin's early accumulation phases, periods of quiet consolidation before explosive rallies. From a risk-to-reward perspective, this setup looks appealing. It has clear invalidation points, well-defined targets, and solid fundamentals backing it. That's a rare combination in today's market. Now, stepping back from charts and price targets, let's look at the bigger picture. The crypto market loves hype. Every cycle, we see flashy projects with no substance pumped to ridiculous levels, while real innovation often goes unnoticed. Kaspa stands out precisely because it's doing the opposite, quietly delivering technology that actually solves long-standing problems. This is why Mara's move is so fascinating. They're not a group of speculative traders chasing memes or narratives. Mara operates like an institution, with analysts, engineers, and data-driven strategies behind every decision. The fact that they chose to mine Kaspa, a relatively new project, instead of Ethereum, even back in Ethereum's most profitable proof-of-work era, says everything you need to know. They're betting on technology, not trends. And for an industrial-scale miner with millions invested in infrastructure to pivot toward Kaspa means they see something big on the horizon. The shift isn't random, it's visionary. Kaspa's blockDAG framework isn't just another technical buzzword. It represents a fundamental leap forward in how decentralized networks can function. It maintains the immutability and fairness of proof of work while solving its historical limitations around speed and scalability. In a way, it's what Bitcoin might have become if Satoshi had access to today's technological advancements. To sum it all up, the Mara-Kaspa connection is more than a headline. It's a signal. When the largest and most disciplined Bitcoin miner in the world decides to back a new proof-of-work network, that's not coincidence. That's conviction. Kaspa has taken Bitcoin's foundation and reimagined it for the modern era, delivering a network that's fast, secure, and scalable without sacrificing decentralization. While prices will rise and fall, as they always do, the underlying story here is about evolution. Proof of work isn't dead, it's transforming, and Mara's move into Kaspa might just be the start of a much bigger chapter in crypto history. So keep your eyes on this space, because if history repeats itself, The quiet builders usually end up leading the next big wave. Thanks for watching. Like the video, drop your thoughts in the comments, and hit subscribe if you want more real-time updates, moves, market trends, and hidden gems.